Okay, welcome to the Swing Trading with Cycles channel. This is where we time the market without predicting it because we use price action to identify trend reversals and we get in early in the trend. Not at the bottom because it's impossible to do that consistently, but early. And so we're going to look at the precious metals today. We're going to start with gold. Here's a daily chart. So Friday was, and this is October 8th, Saturday recording. And Friday we had this created a swing high, right? So we went below this candle here, the low of this candle, which marks the high. That was your candle on day 5, right? And so because we went below that candle, even closed below it, that's technically your swing high, but it's very marginal. And it's also relatively early in the daily cycle at day 8. So it has a lot of time to recover. This is your 10 period moving average, your 10-day moving average in this case, because it's a daily chart. You can imagine maybe there's a check back to it, right? It's obviously rising, so it'll be a little bit higher on Monday or Sunday night when it opens tomorrow night. But we'll see, right? So this has a potential to rebound. Really, you're kind of like, in some ways, structurally speaking, it's like, right, that 1660 area, if you will. Like, you can kind of see just structurally getting below this candle. It's like, okay, that's really bad news bears. This is not great. This is not ideal. But like, this becomes sort of a chop zone in some ways. Like, okay, what's going to happen within this range? That's going to be important, right? So like between, call it 1690 and 1659, 1660. So if we look at the weekly chart, this is really important to understand. What just happened this week with this huge pullback is it created this big upper wick on the weekly chart. This is the multiple time frame analysis that is so incredibly important. That's the alpha. If you found this channel, like, you're lucky to have found it, especially at this time. Broader markets are down upwards of 20%. I think NASDAQ is down something like 30%. There's going to be a huge rebound, and you'll be able to spot it by understanding how to analyze price action. So understand this. With this big wick here, where does it look like the next weekly candle is going to open? Which is to say, really, the candle that's going to be Monday, which is going to open Sunday night based on the way these things trade, right? It's going to open somewhere around here, right? Maybe there's some kind of gap down, and so it opens like here. It would have to gap down below 1660, obviously, to make a new low. And so it's going to, the point there is it's going to be an inside candle, right? And that means it's really not doing a whole lot because it's not making a new high, not making a new low. And these are your levels, right? And that's obviously a really wide range, 1660 essentially to 1729, right? The range for this whole weekly candle that we just had, right? And again, because of this big wick, all things being equal, it'll open around right here, right? So kind of in the middle of the range, not even necessarily at the upper end or at the lower end, which makes it even sort of worse in terms of like there's no edge. And most importantly, you have the CPI print coming on the 13th. That's going to be the real thing that's going to decide the next kind of trend move. But you can see on this weekly chart, we had that 3-week rally, then we failed. Now we're getting another rally. Is this going to be another lower high? Is this going to be another lower high, right? Like structurally, it looks like it certainly could be, right? Like this was a lower high. Like, let's just draw it out just to be clear, right? That was your lower high, and that, is it that one? And then and then we just continue our move lower. That's what we're gonna have to sort of watch for. And notice we did get right above the 10-period the 10-week moving average, and then just came down hard. So we'll be the levels will be at least very clear, right? And then once we get on the daily, we can kind of see, are we making higher highs on the daily versus lower lows or lower highs. It's obviously. And most importantly, on the monthly chart, it's either month 82 or it's month 1 of a new 8-year cycle. It seems like it's more likely that it's month 82. The same way that we built that wick on the weekly, we've built a week on the wick on the monthly, and that's actually because this first week of trading was the whole monthly candle. So that's an important concept to understand as well. This candle here, that's the monthly candle, is actually just really the weekly candle because that's all that's traded right now, right? So the weekly candle and the monthly candle are identical. It's the same exact range. Next week when we open, we'll have a new weekly candle, and that one will put us at it will sort of pull apart the monthly and weekly candles, right? So then you'll have a distinct week. It'll either be green or red, and we'll see kind of how it develops. But so far, we have a green month, and that's also important to understand. The month opened at 1660, right? So goes back to that level, right? If we break below 1660, that means the month goes red. That's a big blinking red light. And obviously, if you're gonna have a month go red, you're gonna have bearish signals on the lower time frames too that are gonna alert you to that. It's not gonna come out of completely nowhere. So that's the picture. We're gonna have to see how the CPI print impacts it, obviously. And if we look at silver, it's really a very similar situation, except in terms of, at this point, the structure a little bit, over the last few days at least. But different in the sense that silver is deeper in its daily cycle. So we have a high at day 23, and now Friday was day 26. In the same, whereas gold had a high at day 5 and Friday was day 8, right? So very different cycle. But like this huge day, right? This is a daily chart, right? This huge day is now serving as the next like pole, right? Like the next anchor in terms of like the trend leg. You had this huge day, right? This was a standout, especially as it outperformed gold that day. And then it consolidated, just chopped around for like almost 2 weeks. And then it broke down. We had a false breakdown. And then what resulted is this huge bar, way bigger than this one, right? And then we come down and we bounce off of this consolidation zone, which was caused by this candle, right? Like literally the range of this candle was the consolidation zone. And again, we broke down below it, false breakdown. Now we've come back and tested the top side of it. That's actually pretty bullish. Now, that would only be bullish if we get some follow through on Monday, obviously, Sunday night, right? Like maybe even a dip below this again. So same kind of picture with gold. Hasn't actually touched the 10-day moving average. Maybe even a dip below down there and then a run up. That could be interesting, right? But it's also late in the daily cycle. The promising thing is that it tested these levels. You really would have wanted to see it make a much higher high, like a significantly higher high, maybe like up to the 21.50 area, approaching 22. That's your next kind of cluster where you have this like lower high. Because really what you're doing is taking out previous lower highs, essentially. But this is going to be interesting. Again, also obviously very beholden to the CPI print. In terms of the weekly cycle, last week appears to have been week 5. But it's the same situation as gold where we're going to have an inside week. Except in this case, this is much closer to the top of the range. I hope that you see that, like the difference between the gold candle. Because the gold candle, we pulled back quite a bit more. In this case, we're at least a little bit higher. Like we're at least a little bit closer to the top end of the range, but not by much. And we poked our head out above this sort of cluster of highs, but then we pulled back. So we're going to really need to reclaim this, and then that gives us a chance to reclaim that. That's kind of how it's going to. That's how it would work. And on the monthly, we are still above. We still have a monthly swing low so far, and obviously we have a long way for the monthly candle to close, but we are on track for a monthly swing low, I guess I should say. As long as we can stay above $20, basically. And we're just a hair above that at this point, so it is tenuous, obviously. But like this big cascade lower, That's what it's trying to fight against. Now, at the same time, this could become the very much needed lower high, right? Because you imagine we did, like, or I should say, this is what we've been doing, right? So we did that, then that, then that, and that, then okay, right? So is it going to be something like that, and then that, and that? That's very possible, right? And I'm not saying even this is saying out into 2024. I'm not even saying in terms of time frame, but like this could become a lower high of all this stuff, right? Like this has been just like a slow drop, and then we just kind of took the elevator down, like whoosh. So now this could be just your like lower high. Maybe we even rally a little bit more, but we'll have to see. So that is silver. That's the monthly, and now we'll look at GDX. So GDX looks a little bit more ominous, like this big drop here, but also did not touch the 10-day moving average. This is your daily chart. The high here is on day 6. And as I kind of said this on Twitter, we tested this area, so this kind of becomes a potential double top. The thing is, we did make a higher high than this, so it's not like we made a lower high, which happens sometimes. But obviously, what we need to do is come back and retake this high, right? And then that gives us a chance to get back above, like maybe closer to the $28 range, to get back above this cluster, right? And so it all comes back to that CPI print, of course. You would imagine over there Monday, Tuesday, we consolidate to some degree, right? Maybe break down further to retouch the, like, you know, take out another lower low, and then some kind of bounce into the print. We'll see. So that's GDX on the daily, and on the weekly, oof, that is a really ugly weekly candle. My God. Weekly candles don't look much more bearish than that, right? Without being like just a solid red candle, obviously. And I drew this box because this seems like it could be sort of clear air, right? Below 2150, just kind of an elevator down to like 16, right? Huge losses very fast. And this is setting up. The reason this is so bearish is because you think about this. Where is the next candle set up to open? Like right here, right? So it's like set up for a swing high, like almost automatically, which becomes another lower high compared to this, compared to these lower. Like that's the whole point, right? Like this candle was kind of like setting up your lower high, because that's an important just kind of point. Price has to make lower highs along the way. And here's your big tell. That's really important. The monthly candle for the GDX has already gone red. That's a really bad sign. We need a very very fast bullish reversal, because like this is a really bad news. Interesting. That is important to know about. And let's finally look at Dixie really quickly, because we know how correlated that is with all these. And so it's made a series of higher highs the last 3 days, right? Let's look at that. What I mean by that, right? So this was an inside day. Didn't make a new low for this, but also didn't make a new high. But then the next day opened as an inside day, but got followed through. This makes a higher high than this. And then the following day, this makes a higher high than that, right? So that's day 18. So it's a question of like, oh, wow, is this some kind of like daily cycle low we just crossed above? We'll see, right? We'll know in hindsight. Also, I guess it could be that, you know, like, yeah, right, like as you, right, sort of reposition in hindsight, like something like that. So that was day 38, for instance, right? So like that was your half cycle low per se, and then boom. Could be. We'll see. That's something that may become clear kind of in hindsight, but that's interesting. So that's the lay of the land for the metals.